Welcome to TradeTheMBI.com. This is John. This reports for the 4th of May. Well, we had the crossover here on our MBI indicator of the magenta below the yellow, and then yellow below what is what we call a trigger line here, which is the orange. It's the same as the one when you see the gray as it relates to the blue. It just confirms that you have a more trending move than just one-off kind of thing, which you can get those one-off moves here within the readings of the magenta and that. So it just helps normalize the overall basis of it. But we've had this both declining blue, declining green, which from an indication of weakness is really what that's expressing. Now, that said, it's happening within cyan under red, and we were talking about this, the potential of a DOC spread where cyan moves above red. Almost got there the other day. Actually, it's starting above right now, 256 to 169 for the cyan over the red. So it could be the beginnings of a more drawn-out decline. This particular point, you're still looking at short-term buyers here down in the steel rising. So any selling is going to be mitigated by those additional buyers. The thing is, if there's enough selling that can overwhelm them, then that would be the only interesting. But again, simple enough for us. We get the ABM at 41.62 and a quarter. Above that, still more biased long than short, but intraday, of course, you just go with the readings from there. The NQ Nasdaq clearly weaker, has been for a little while, and expressing itself a little bit stronger and much broader spread, and actually even have green below red DOC as well, and you already had that same fade over here from the MBI readings as well. So, and not surprising now to see, of course, it has dipped below its ABM at 13,838. So that again becomes an easy transitional point. So it just makes it worthwhile. And of course, then you have the 61% and below. Anything below that 61%, I think that you're likely looking at a full 50%, which would make sense because that would take you, well, at least down to the 13.2 range, which would fill this positive extreme that exists on the daily chart. So it's worth noting that. Gold standpoint, everything turning up to the upside for it, along with DOC, orange underneath red and that. So it's kind of triggered to the upside from there. Euro just hovering around, it filled up the positive extremes that took place right there. Also expressing some weakness though within it. That steel reset though gives it a lot of force, so it may just be a little bit of corrective mode. And that happens. For a Bitcoin standpoint, we had a big sell-off middle of the day, and that pretty much filled a lot of the positive extremes that took place, which went all the way back to right here, and just basically filled that back down to the 54.7 range. No shock with that, but it was pretty clean uptrend within that. And what you can see here is what I'm talking about from the necessity of the orange line. It's not necessarily something that needs to be visualized here. It'll show up within the readings, but that crossover, if I had the gray line on as well, you'd see that also the blue cross below it. So you have both of them doing it at the same time. And it's just going to give us a little bit earlier trigger. Now the key with that though is you need to have known that you had a white pop up here at least above the 9 level. We have the 10 line right here. That's just as good. And then come back down from there. And that lets you know that your uptrend has basically petered out. And it's effective. It happened the first time right there, but you never got a sell configuration. Did it a second time, and so when that actually does trigger, gets you just before you get the faster decline. So just a little bit ahead of where things were. Let's go back to the beginning of the day on the ES chart. We had it extended from that buy configuration, came up to the peaks, had a bunch of positive extremes. Right up there now, because that was the fill number that we'd be looking for intraday was in the 181.50 range. So when we popped up again, DOC spreads came through, a couple of them, but they got bought back up pretty fast. And then we started to get some of the morning setups started developing a little bit, but it wasn't enough to drive price really lower until we got midway into the day. Then we started to get some of these clear trigger signals. And actually, they were a little earlier if you look at that magenta reading. Some of them match the pink dots exactly, but a couple of them are going to be just a little earlier. It wanted to get in over there at 93. The final signal came in 91.5. And again, whether you're looking at this from a red or a green standpoint, it doesn't matter because it's just sideways action. Even here from the buy, it's like, yeah, you have moves above, but you also have moves below. So it's just a nondescript, and you're waiting for a breakout maneuver. It literally came right here when you can see the drop, and it was also shown here with the yellow below, the orange one and the magenta crossing it below as well, and that's why it actually triggered, irrespective of it. But that's going to give us just a little bit more advance, particularly on pivots that are below these 25 levels, and blue ones when they're higher, a little bit different set of criteria, but similar. And it just means instead of getting your red here, it's going to happen back over here. So that would just, it's a few extra points, and you multiply that over a bunch of trades, and it makes a difference. It was great when this buy came in. We talked about the Morganacci zero line rising, and I typically said that when you have a flat 100% and you get that bottom rising, price usually wants to go to it. So when you get a buy signal there, usually you're revisiting now. Secondarily, dip below the red line here with the extremes, so we know the lows are likely to get revisited. So any little pop was going to be short-lived, which it was. I mean, it was popping back and forth and going. So I usually try to look for a discount entry in those setups, because there's still good probability when you're in this kind of rising setup that you're going to get some degree of a bounce. And then of course we ended up with another GAM yellow candle showed up right here, and again that one shot all the way up to the 50%, that little wick right there up to 93 from the 90. I mean, there wasn't a whole lot of range here, so the biggest range you're looking at is from 90 to 93. That's not exactly super duper. There's something I'm working with right here, because there's really no justification for a sell when the 100% is maintaining itself. You're in a neutral trade, and then we'd also gotten below the 10 level here from a blue standpoint. So I'm looking for a turnaround move when I'm getting down into those levels, and particularly once the red got to negative 130 here, and then it did it again at negative 2. At that point it's not going to take much. And of course it was literally the next bar, which I probably will be able to get it triggered to move up just slightly from there. But then the white NBI candle came in, and it fluctuated for a little bit, popped down, but it was within this rising configuration. Of course, DOC Steel, yeah, your red rising just kind of muddled with some of your other readings because it just goes back and forth. That's why we like it when we get the clear separation like we had at short signal. But this was still worth a nice entry from 89.50 to 92. It's about as good a move as you could get. I mean, that was as much range as was being offered. So as long as it got it correctly, now you'll see that within our guidelines we were just talking about, where magenta crosses below yellow, you already have blue underneath the gray. That exit would be just a little higher up at the 94.25. So a couple extra points. Not terribly significant, but it again adds up, and it just gets us more accurately defining it. And it's much nicer having a short up at the 94.50 because you don't have to worry about those little pops that often take place within a short signal. But that short worked out well, from at least even that point to where the new buy was down to 83. So 10 points from that entry, and just under 10 points from where the actual violet candle here, short signal, popped in. And then from that point, you get this rise, and when you don't get corresponding action with it on that rollover, you kind of worry. It's the same thing that happens here where the green rolls over on the DOC and the cyan splits right about there, which is exactly where you ended up with blue crossing gray and magenta, yellow, all below the orange, and so everything was a green at that particular time, particularly even with the steel crossing below orange. The most ideal ultimate signal would have been having that steel cross all the way below cyan, and he would have been like, the gods have spoken, so to speak, from an algorithmic standpoint. But needless to say, that was a nice post-market dip, and then the turnaround, because again we dipped towards got actual to zero level. The red 2.43, what was that low? Was 148. This one was negative 0.13. But still, once we reach that negative, we're looking for the pop, and happened pretty fast, and of course faded back because again you have your dip below the red line, which are these red dots, letting you know, hey, that's happened, and that's where we refilled right back to the open, and kind of been floating a little bit ever since that point. But pretty accurate from that standpoint, and right on target with the expectations. So I'm just going to continue to tighten it up. When we look at it from my conversion one, where the actual pink dots are showing, pretty similar. So it's almost identical. I'm adding a few of those conditions right now, working with that code to just move that across just a fraction more to make it even tighter. As always, though, look for me in the Skype chat. Trade well. Talk to you later.